Okay, so now we're ready to start working through the different lines and populating them. And I think this is probably the most trickiest parts of the financial model as a whole, just in terms of wrapping your head around the math. But we'll take it kind of slow. I'll probably break this up into a few different videos. And if you don't get it, don't worry. I'd encourage you to maybe watch this section again, just so it makes sense. And again, if you're really familiar with accounting and cash flow statements, it might make more sense than if you're kind of a novice. It's a bit tougher to understand because of the logic, but I'll try to explain it. So luckily the first line isn't too hard to understand. It's cash at beginning of period. So where are we going to get this information? So first off, your cash, we're assuming you're starting at day 0. And then kind of day 1 is when you get your investment and you put your money in. So based on that kind of logic that we've been using, you started off with nothing. This is day 0. And there you go. So that was simple enough, and that'll kind of be your starting point typically. So at the start of Q2, so fast forward 3 months now, you've done some activities, you've raised some money. What's your beginning cash at beginning of year 1, Q2? It would be your ending cash from Q1 of year 1. So your beginning cash is always your ending cash from the previous quarter. So all we have to do, and once we figure this out, is here. So this number will flow up to here as your beginning cash. This is your starting point, is your ending point from your previous quarter. With that logic in mind, that's your formula all the way across for cash. So we can copy this. So your beginning cash for Q1, or I keep saying Q1, it's year 1, Q4 is your ending cash from here. We'll just make sure, and there you go, that's the cell. The only thing, of course, is just remember you can't copy just because we have this totals column in, so you need to just be careful. And then this will equal here, and we can copy across, and then we can copy this entire block over here as well. So just to double check them, yep, Q1 of year 3 is referencing the end of year 2, and say year 3, Q3 is Q2. So we're set. So it's as simple as that. So really, as long as you get kind of this initial setup done right and you understand the logic here, that line is fairly simple. Now, net income is another one that's really easy. This is just your net income from your profit and loss statement. It's as simple as that. So all we have to do is link this to our P&L. So net income. And we're fortunate this time in the sense that both this one and the P&L have totals columns. So when we copy our formula across and we do this kind of skipped over to the right number, and we can double check it. 365, 167, 365, 167 right here. So we just have to simply copy this, and again I'm just hitting Control C, and then I highlight the cells I want to copy to, and I hit Control V. And that's that. So 2 lines down, not too difficult so far. One line I forgot I didn't add in here already is inventory. And back when I did the balance sheet originally, I forgot to include an inventory line. And I realized that as I kind of got halfway through the cash flow statement. When I got to this point, and I started thinking about it. So I went back and made an additional video in the balance sheet section talking about inventory and whatnot. But we now need to add that line in here as well. So inventory definitely isn't from financing. A lot of times you will see it in the cash flow from investing section, and then sometimes you see it up here in operations. Could go either way. I believe the true accounting rule, I believe it goes in investing. I'm not 100% sure. Okay, I paused the video, I double checked really fast on Google, because I have seen it both ways. It sounds like the proper way that most people would do it is up here in operations. So let's include it with operations, and we're going to include it here. The main reason is this kind of follows a flow. We're going to have like our asset categories here, change in inventory, and then we have our liabilities. And because I mentioned earlier, if you insert something in the middle, you see now our formula just grabbed it because it just expanded to include that line. The only thing that didn't happen is a total over here. So we just want to copy a total. Okay. I'm going to skip these few, and we're going to do equity investment, and then we're going to end this video, and then we'll do the rest of these. And the reason is the rest of these all follow the same logic and all come from the balance sheet. And that's the most difficult part to understand, so I want to dedicate its own video. So for the cash flow from financing, equity investment. So this number can come from the balance sheet. So our balance sheet, we had a capital investment here, and then we can copy this across. And then here we need to adjust our formula. I think it's, I'm trying to remember now. So what happens when you start referencing different spreadsheets and stuff, you forget what your references are. H. And that was the 250 that we put for year 2. Now, I believe that becomes K. Let's double check. Nope, L. My alphabet was off. Now, as I mentioned before, once we complete all these financial statements, we'll go back and we'll decide, okay, well, was 250K enough of an investment? Was the timing right, etc.? And what we'll do is we will change on here the references based on that. That's the only part. I mean, it's not totally automated. So say we decide at the 250 we need it here. We need to actually, we had hard-coded in some zeros. We're going to have to change that. But with that in mind, that's one of the very few things that we need to kind of manually do, if you will, or fix up a formula here to make it work. There's ways to automate this, like where you would, on your assumptions tab, just say here, and you would put your quarter, and then you could do a lookup. It would look up which quarter. A lot more complicated than it needs to be in that case, and that's why I opt for just kind of taking the easy road on this, kind of how that's laid out. So nonetheless, so this is referenced in the balance sheet. We have in our investment. And that's that. So we'll end this video, and then when we come back, we'll handle all of these balance sheet accounts, and I'll show you how to do the correct logic to get the formulas here.